What's up, guys? Hope you're doing well. Have you seen what's happening with the yen? Probably you have seen, and probably you got caught in what's happening with the yen. So just wanted to make a quick video to explain probably for some of you what you're lacking in terms of fundamental understanding, but also how we use the strategy and why the strategy is powerful in this type of environment. So first of all, what's happening with the yen situation? BOJ has been looking at the whole global economy and more specifically the Fed. And the Fed have been mentioning, and this is why we've seen the recent action on the gold and US dollar, that they intend to start the rate cut next year. Now, we can debate whether it's a good thing or a bad thing, but the thing is, BOJ is now looking to, and we've seen BOJ, and we should know that BOJ has been looking for an intervention for some time now. So it was only a matter of time to see what we are currently seeing on the market. But this has kind of sped up their, let's say, take action process. Action has not been taken now, but the thinking of taking action is, and this is all in the wording because it's all about perception. Now, what the market is currently seeing is that maybe BOJ, so the monetary policy for Japan, is to end the low interest rate. Now, you would understand if you've got a bit of fundamental understanding, and if you haven't, this is something you would have to focus on. I think I could recommend plenty of platforms to understand a bit more about interest rate and the consequence in the economy. Investopedia is probably one of the best websites to just get the basics, but you would understand that low interest rate and ending the low interest rate would interest investors at this specific time, and this is why the currency is currently strengthening. Indeed, if we put an end to low interest rate, it'll be worth right now buying the currency and investing in the long-term boom of the potential of the repercussion of ending the low interest rate. And as such, we are seeing early investor positioning themselves on the back of BOJ making this happen. But it hasn't happened yet. And this is all at the minute an educated guess based on perception of what BOJ is hinting at the minute. Anyway, this is leading to be a strong fundamental driver. Strong fundamental driver currently on the market have an impact in our strategy, in our trading plan. As you've seen probably in my YouTube video, I have a very specific way of trading the market based on the trading plan and my trading journal. My trading plan defines 3 types of opportunities, ranked from 1 to 3. 1 being the best possible setup with the best odds of success and potential, to 3 just being the most basic opportunity I can find on the market with not much potential at all. So, how does this trading plan now work with fundamental environment like this? So first of all, you should know that when you've got a strong move and strong momentum and you can't pinpoint the driver, let's say you have no clue about what's happening with the yen, identifying a move of over 200 pips within one trading session is, let's say, 90% of the time, a clear fundamental driver. Now, it's up to you that when you see, for example, GJ falling over 200 pips overnight, to try to understand the fundamental driver. If you do not know that a fundamental driver like this, usually when you've got a strong push, will not reverse early morning. The early morning session will not offer you a reversal. The momentum is too strong and the liquidity is not there to reverse your possible trade. So know that when you go against this type of fundamental driver, without even knowing what you have as a fundamental driver, you know that your limited odds of success makes the reversal less happening. How does it work with the trading plan? For example, I have, and I've well covered on the last YouTube video, it discards any opportunity I have as a 3. So now you can go back to the video to understand what 3 is. To be fair, this is what we focus a lot on the trading floor, and this is what I'm coming up with next year with our new service, where I really want to emphasize on what I've seen being the main weakness for every trader that use our strategy. Understanding the journal and understanding the statistics that they extract and how to build a solid trading plan so that you create this mechanical approach. Anyway, coming back on the opportunity, it means for me on my trading plan that any 3 is pretty much a no-go unless they have reinforced odds of success. And as you've seen, the first opportunity we had was the third touch, key level 38 fib, but 38 that was pretty much used before because the high was made just barely a few pips, so that 38 more or less was used. The key level was used, and therefore they lose their potential on confluence. So when you look at it, you only have a third touch and some sort of key level, which makes this opportunity a 3. Now, on any other time with strong driver coming and the market structure around the trade, I would not go for the trade. But this is why we, as part of our strategy, build runner. It helps you to be mechanical about the way you tackle trading. So this trade, first trade for me here, was taken and was a clean loss. Covered by the runner, yes, but was a clean loss. So what does it mean when you use the strategy? And what I'm doing here, explaining you how it works, it's very important because this is a key weakness, not only in our strategy, but most strategy I see out there when it comes to the behavior and the fear factor for trader. Coming toward the next zone, so for me, around the 183 here, we have reinforced odds of success. Yet we're still early, yet I'm still aware I'm against momentum that has built up and is unlikely to offer a reversal. What does it mean? It means that this next setup I'm seeing, which has a set of confluences, is ranked 2. Coming against the fundamental driver is possible, but I know I've got a very limited pullback. So when the trade triggered and it went straight into drawdown and as the depth that was anticipated for this specific trade, and then reverse to break even, I have to account what the pullback was as part of what I had planned. It doesn't matter which entry I have. I have to be aware that we are in December, liquidity is getting lower, volatility is high, we're still early in the session. I might not reverse the trade on the exact spot price of interest. So knowing that, if I'm spotting what I'm targeting, say in this specific case was a 60-65 pips reversal, whether it's from my entry or way deeper in my entry, I have to take it as the move I was looking. And in this specific case, yes, still covered by a runner, the move was done without me profiting from. Also, I went into 55 pips drawdown just to come back to 5 pips profit, and as such the move is done. I have to take B. In this specific trade, when odds of success are reinforced on the next setup, I can't possibly settle for a loss. I have to give it the trade the chances. And again, this is why mentally the runner helps a lot. Coming to the last possible play, we end up going to the last fib level, which is the 61, after clearly breaching the 38, the 50. The 61, when you have 38 and 50 breach, will pretty much always offer you some sort of pullback. Now, I'm being very cautious when I say some sort of pullback. It doesn't mean the strong reversal we are looking for. Therefore, I have to look at the next setup as part of my training plan. What is it? What does it rent? And what's the possibility? The next setup for me is just a 61 with alignment. That's a 2 confluences trade. That's a number 3 in my training plan. And as such, has got limited potential. Yet, increase odds of success by the breach of the 2. So what I'm doing in this specific trade, I'm taking it, I'm playing my limited potential, and I'm walking away. And this allowed me to recoup my losses for today. So even in a strong fundamental environment with a fundamental driver, with me going against, the strategy works if you are prepared and if you have a trading plan to go all the way. Now, if you start picking and choosing trades randomly as part of this strategy, you will never, ever build a statistical edge.